I have a client who is a personal consultancy company and has been acting, well, he acts for 5 or 6 different entities. They've all got contracts. He came to see me the other day to say that his major customer is now refusing to continue because of IR35 and insists that he becomes an employee. What reasons would they have for doing that? And what reasons have I got to say rubbish?
They don't really have any reason. I mean, obviously, the risk is with the contractor themselves. So the end user he's working for shouldn't be that concerned about it. If he's operating through a personal service company, the liabilities will rest with him. So the client that he's working for shouldn't have any problems there. You often do get a lot of confusion that's based around the 24-month rule, which is obviously about claiming travelling expenses to a client site. For some reason, people are often confuse that with IR35 and think, and you have a lot of end users who do that. They will think that once you go over 2 years, you are an employee, you should be an employee of the client you're working for, but that's not true at all. You can have contractors working for the same client for upwards of 5, 6, 7 years without any problems, as long as obviously their working conditions are all compliant. So there is no reason, unless there's something more in depth for the end users to say, because of the risk of IR35, you have to be an employee if they are operating through their own company. Obviously, it's you'd have to look at the contracts and the working conditions in depth and see what the scenario is there. But obviously, the fact that your client is working for multiple clients is very positive in itself. So that should stand him in good stead if there was an IR35 inquiry.
I'm confused by the fact that 12 tests, don't seem to bear any relation to the HMRC's questions on are you self-employed or employed?
No.
And it obviously is, it's really the same question, ultimately. It didn't mention multiple customers, it didn't mention whose equipment and facilities and premises you use, it didn't mention who controls the work, sets the time, whether you're delivering things or merely working for an hourly rate. All of those things. Now, I've got clients who I'm quite confident are, self-employed, not employed, but looking at those 12 tests, I would think would be right down the bottom of high risk. And again, that's why there's been a lot of condemnation for them, because they don't. I mean, I think what the revenue are trying to aim for is it's not these tests aren't are you inside or outside IR35. It's not a review of whether you're inside or outside. So it's not going in depth and looking at control and that sort of thing. It's trying to give you an indication of what the risk is of you being subject to an IR35 inquiry. But you're absolutely right. They don't mention a lot of the key factors that are involved with status and IR35. The tests weren't drawn up just by the revenue. Obviously, they were drawn up by the IR35 forum, which was composed of lots of different members, and I think there was a lot of toing and froing with the questions, and there were various different releases of them which weren't working. So yeah, I mean, as I said, I don't think contractors should really be that concerned about them at all, because they're not going to have any impact on them going forward. But it is something that they do need to be aware of, and the revenue might make reference to in letters if there is an IR35 inquiry.
It was said if IR35 didn't get you, then the settlements legislation would get you. The revenue finally lost the Arctic Systems case and brought out some draft income shifting legislation. What's the current position on that?
We were all expecting this draft legislation, the income shifting legislation, to come into play obviously several years ago now, but there's been nothing whatsoever, no activity at all in that arena from, certainly from a contractor's perspective. So we've seen no inquiries, no cases, nothing's been released. So,
so keep calm and carry on.
Yeah, absolutely. Yeah. I mean, technically legislation's still there. Section 660 as it was is still on the shelves, and it could be used, but we haven't seen anything. And if you're paying ordinary shares, if there's a 50 share split, there shouldn't be any risk. We haven't seen any inquiries, certainly. Obviously, Arctic Systems, we expected the revenue to release this new legislation and really go hard at it, but we haven't seen any evidence of that whatsoever.
The client who directs for BBC and also for ITV and runs a limited company, and he's on contract because they do 3 months on a particular program. I don't want to mention the soaps, but he does a soap on BBC and he does a soap on ITV rather. How is he fixed with this?
The revenue, I mean, so he has separate contracts, a separate contract with BBC, separate contract with, you know, if they could potentially look at it. I mean, anyone operating through a limited company and drawing dividends, if you're working for a client like that, then they could still look at it. They'll look at it on a contract by contract basis normally. So they will look at the BBC contract separately to the ITV contract, for instance. But it could still be a risk. I mean, certainly, you know, it's obviously you're not going to be completely different to an IT contractor, for instance. But you know, if you think about control and substitution, could he send somebody else in his place? It's going to be quite tricky. So you know, all these people are potentially going to be affected.
You've got your contractor client.
Yeah.
Going X number of years. Okay, they get turned over and revenue say, oh no, and it comes out that they should have been taxed under IR35. Here's the fine, here's the penalties, here's the amount of tax you owe. Company then turns around and says, well, we haven't got it, can't pay it, going to go into liquidation, end of story. Does anything happen to the contractor, the director, because of that? Have we heard, is there any inference of HMRC saying going past the incorporation and going for the director's
They could potentially. I'm not aware of it having happened with IR35.
Have we had anything yet? Do we
no,
know
I mean, they've certainly not released anything in the new updates that they've had, but as I said, it could potentially happen. I mean, you do get contractors who, you know, some accountants will advise contractors to close down companies and reopen them to avoid the risk, you know, the risk of IR35, but obviously it's not something that HMRC particularly like. They call it phoenixing, and you know, during the closure period, there is that heightened risk when the final returns are going in that they could come and have a look at IR35. It's certainly not something that we would recommend. But obviously, if the company is closed, there is only a limited period of inquiry for the revenue to you know, they've got 12 months after the filing date of the last corporation tax return. So if a contractor's company is closed, they don't have that 6-year window of opportunity to inquire, but there is that heightened risk during the closure. But I mean, yeah, as I said, if they do go over and there's no assets in the company, they could potentially go after the individual contractor.
We've got no evidence.
We've not seen it happen in IR35, but it could do.
A lot of things that could do, isn't it?
Yeah, of course.
Loads of things they could do. They could pick up the phone, but that's another issue.